Welcome to MCM GIC. Let me introduce to you PILC explanation. What is the time and market proven strategy that helps to invest in property, globally? MCM has developed a strategy called Property Investment Life Cycle, PILC, to ease the property investing process. Basically, PILC comprises various proven investment strategies throughout the property life cycle, from the land acquisition, construction, development, management, renovation, refurbishment, and redevelopment. When finding potential projects to invest in around the world, they may fall into one of the above 6 stages. Depending on what you're interested in, as well as your risk profile and investing tendencies, the PILC is a good framework to give you a head start in understanding a project. Now, let's go through each stage. Land acquisition. All properties need land before they can even start. In this case, land is the raw material for just about every property development. One needs to know what kind of land is needed for an upcoming project. Is it the right type? Is the land fit for agricultural projects, or is it better suited for industrial ones? Are there any environmental factors that may hinder project growth? If it's a residential project, does it connect well with surrounding facilities, public transport, medical hub, education hub, etc.? Is it at the right location? The area could already be matured, which could lead to a steady interest. If it's an upcoming developing location, there may be a spike in valuation over time. It's up to you to determine that as an investor. Is it the right size? The project may not be big enough to meet demand around the area. The individual unit size may or may not meet the demands of the demographic it is attempting to serve. Construction, development. This part of the cycle holds the largest profit-earnings ratio in the property development life cycle, PDLC. Generally, this space is mostly occupied by larger companies, since there is a need for large capital and expertise. One thing to take note here is what kind of agreements are available for investors. Will there be a leaseback, rent-back option? Who will bear the outgoing expenses, such as legal documents and construction interest? Are there any packages that add to your convenience? Management. Management is key to ensuring that the valuation will increase over time. With quality management and space optimization, the property's ultimate value will grow steadily. Renovation. Renovation is a necessary stage because it adds to the functionality and aesthetic of the property. Any additions to these aspects mean that the property price will increase. Max Shankar of MCM stated this. Renovation is like adding the soul into the body. Refurbishment. Sometimes, properties can become undervalued. These can be due to poor management, lacking financials, or due to being abandoned. Simple renovation may not be enough. Plenty of incentives exist around the world to encourage refurbishment. For example, in the UK and Germany, it is encouraged to refurbish historical buildings to revive and maintain their value, both historically and financially. Redevelopment. In case a current property is beyond refurbishment and does not meet market demand, it may get redeveloped entirely. Another reason is that the building may get destroyed due to disasters, both man-made, fires, and natural, earthquakes. Conclusion. There are other important factors to consider, such as demographics, location, and overall stability of the country. Pair that with your investment profile as a property investor, and you can start building your experience over time as you look at more projects. One lesson learned over the years: never fall in love with your investment properties. To learn more about PILC and how you can get involved in the MCM GIC, please contact MCM today.